Okay, here's a weird one for you. What if I told you that a new trade agreement, some random trend on social media, and a hunk of rock pulled out of the ground are all secretly connected? Well, today we're diving into this hidden battlefield that's totally reshaping our world and really what it even means to be powerful. Let's get into it. Yeah, I know, it sounds like the start of a bad joke, but the answer to this question, it actually shows us who's really holding the cards in the global economic of 2026. Stick with me, and I promise, we're going to connect all these dots. You see, what we're all living through is a new kind of war. This one isn't fought with tanks and planes, but with things like supply chains, interest rates, and yeah, even TikTok videos. The old rules of who has power and why, they're being completely torn up and rewritten as we speak. All right, so let's start with player number one, China. For decades, we've all heard the line, China is the world's factory. But that story has changed. It's not just about making things anymore. It's about turning that insane manufacturing power into a geopolitical weapon. And look, this isn't some conspiracy theory. This warning from Chatham House puts it pretty bluntly. They're saying this isn't just business as usual. It's strategy. It's a calculated chess game where every economic move is designed to give them more leverage on the world stage. And if you want to see what that leverage looks like in numbers, just look at this chart. It's staggering. Back in the year 2000, the US was the undisputed manufacturing champ. But fast forward to 2030, and the whole picture is flipped on its head. China is projected to control almost half of all global manufacturing. That isn't just a small shift, it's a full-blown economic earthquake. And that power gets really focused in what some experts are calling chokeholds. Think about it. China processes over 90% of the world's rare earth minerals. You know, the stuff you need for literally everything from electric cars to defense systems. They absolutely dominate green tech, like solar and wind, and they're quickly catching up in semiconductors. This means Beijing basically has an on-off switch for huge parts of the global economy. Now, let's talk about the other superpower in the room. Because while China uses manufacturing to project power, the United States does it with finance. A single decision made in Washington, D.C. doesn't just stay in the U.S. Oh no, it sends massive tidal waves crashing across the rest of the world. To really get this, we need to understand a key idea: capital flight. All it means is a whole bunch of money suddenly fleeing a country because it's looking for a safer or more profitable place to go. And more often than not, that safer place is the United States. So here's how it plays out. The U.S. Federal Reserve raises its interest rates. Suddenly, investing in American stuff like government bonds becomes way more attractive and a lot safer. So what happens? All this global money gets pulled out of emerging markets and rushes into the U.S. For those other countries, this is brutal. It triggers that capital flight, their own currency gets weaker, and suddenly it becomes incredibly expensive for them to borrow money. So a decision made in one building in Washington can push a dozen other economies to the brink. So if you're a big, growing country caught between these two giants, what on earth are you supposed to do? Well, let's take a look at India, a nation that's basically walking a high wire act, trying to balance its own future against these massive outside pressures. And that tightrope walk just became deadly serious. Look at this new trade deal. On one hand, the US is offering a massive cut on tariffs for Indian goods. That's a huge win for India's economy. But there's always a but. The price for that deal is steep. India has to cut ties with Russian oil and promise to buy more American stuff. This is what geopolitics looks like in 2026. And the risks here are just enormous. As Moody's points out, you can't just flip a switch and cut off a major source of energy. It's not just a political move. It could seriously mess with India's growth and send prices soaring. India is making a huge, huge gamble. Okay, so you think, with all this going on, geopolitical drama, tariff threats, foreign money leaving, the Indian stock market would be in a total nosedive. But then, something weird happened. Look at this chart. After that first big dip, the market didn't just stabilize, it came roaring back and hit a new all-time high. What in the world was propping it up? And that brings us to the wild card, the disruptor, the totally unexpected new player in this game that's changing all the rules from the inside out. And it's not a government, it's not a big bank, it's something completely different. So who was it? Who stepped in and held the line when all the big global institutions were running for the exits? The answer, well, it was hiding in plain sight the whole time. It was India's own people, millions of regular domestic investors putting their money into the market through these small, systematic investment plans. They became what IncredWealth called the quiet stabilizers. There were so many of them that they collectively poured enough money in to completely cancel out the foreign money that was leaving. This is a game changer. So, what's powering this new force? It's social media. Think about it. Financial news isn't controlled by a few guys on Wall Street anymore. It's everywhere, spreading like wildfire on Reddit, on TikTok, on X. This creates this incredible collective momentum, a kind of herd behavior. And that herd can either stabilize an entire country's market, like we saw in India, or it can cause absolute chaos. The crowd is now a market force to be reckoned with. So what's the big takeaway here? It's that the old playbook is useless. If you want to understand today's economy, you can't just look at financial reports anymore. You have to be a geopolitical analyst, a supply chain expert, and yeah, you even have to scroll through social media to see where the wind is blowing. And that leaves us with one last massive question. In a world like this, where a supply chain can be used as a weapon and a viral video can move markets, how do we even begin to define what's risky anymore? The old models are broken. And figuring that out, well, that's the real challenge on this new economic battlefield.